Now, in 2017, the South African government resorted to hiking personal income tax rates for the first time since democracy. This in efforts to raise more revenue, but also to reduce inequality. However, those efforts failed, resulting in government revenues, particularly from personal income taxes, falling even further behind the budget's targets the following year. Hilary Joffe, editor-at-large of For Business Day, joins us now to unpack South Africa's tax journey and the impact of tax hikes on taxpayers. Hilary, always a pleasure. Good afternoon to you.
And a pleasure to join you too. Thank you.
Wonderful, Hilary. I mean, at first glance, it feels obvious that if you, just tax those who have more income, then there'll be more money flowing through the system, and you can take all of that money and cross-subsidize the poor. But I guess from your article, it's clear that it's just not that black and white.
I think generally speaking, that is true, and that is what our tax system and indeed our whole fiscal system tries to do. And it is highly redistributive already. We have a progressive tax system which charges people higher rates of tax the higher they earn. We have a spending envelope which is heavily weighted towards spending on poor people, on vulnerable people. The tax system, I think, in a way reflects the inequality in the society, or rather tax collections do on the personal income side. Because what you've got is a very small base of people at the top who are in that very high rate. So there are limits, it seems, to how much you can charge them before they start either evading or avoiding tax. In the early days of democracy, what the government did was they progressively reformed taxes, bringing down the rates and broadening the base, and charging lesser rates, but actually collecting more tax. From about 2015, the government did exactly the opposite. For the first time since democracy, they started raising personal tax rates. There was a 1% across the board increase. And then quite suddenly in 2017, the top marginal rate, only for people earning 1.5 million more, was hiked from 41% to 45%. So an academic study now has looked at that and found that, in fact, what happened was that people reported less taxable income, the people in that top tax bracket. And not only that, but there's some evidence looking at the records of the companies for which they worked that output at those companies was even affected. So we're not talking about the whole tax system. We're not saying that you can't raise more tax in South Africa. You no doubt can, and there are many ways of doing it. But that effort to hit people in the very top bracket with a higher rate of tax, we knew at the time had failed, because by 2018 it became clear that even though the tax rate had been increased, personal taxes were still falling short of target. But this academic study has looked in much more detail at that and tried to identify what happened and why that happened.
Also interesting here, Hilary, and I'm very keen to find out then about the Laffer curve, because I think that's the important kind of tool that we're using here to help us maybe unpack this a little bit, and maybe also just trying to figure out if the system also worked better when we were creating more people in the middle class. So as there were volumes moving into that high income bracket, the system kind of made sense. But because now we're creating less middle class people, it does just look more like strain and incentive for evasion and avoidance.
I think you're absolutely right. That growth and creating jobs and creating prosperity is a much better way of getting more revenue out of the tax base than raising the rates themselves. Because with raising the rates, you always have the risk of what economists call the Laffer curve. I mean, it's quite discredited in some ways. A lot of economists would argue with it. But the general notion that they get to a certain level where people almost have the incentive to go to their tax advisors, do fancy structures, legitimate ones or illegitimate ones. The general idea, I think that is quite important. It doesn't mean if you bring down tax rates, they will necessarily pay more. But which was Laffer's real argument. But I think it is the case that at some level of tax burden and tax rate, you start getting quite dysfunctional effects, and that is what happened. And as you say, What we really would like is a much higher rate of economic growth so that people are earning more and there are more people in those higher tax brackets.
Also, the issue of avoidance and evasion. Of course, we know SARS has had quite a bit of money allocated to it by a national treasury to, of course, become more efficient, to get the technology going behind it all. But I think one thing that doesn't change, Hilary, and of course, there are those bad actors. We're not necessarily making reference to bad actors. It doesn't change the fact that, where people feel squeezed, they're more likely to be less compliant. And of course, in South Africa, we've got our own structural issues that lead to people actually being double taxed in many other ways. So I'm wondering here, even when we talk about the squeezing of those who are high income earners in South Africa, are we not also creating incentive for people to remove their tax affairs from South Africa altogether?
That is another concern, definitely, that at some level of tax burden, there comes to be quite an incentive for people to immigrate their money, if not themselves, even though they still have to pay tax on their worldwide earning if they are living here, and they could be moving to jurisdictions where tax is even more burdensome. But I do think that because it is such an unequal society and because we've had such slow growth, you've got quite a small number of people at the very top who are bearing a lot of the burden. Now, from an inequality point of view, that's a good thing. But those people at the top are contributing a big chunk of the tax base. So you've got to not be tone deaf with tax policy, if you like. You've got to calibrate it quite carefully. And certainly a lot of tax experts would say that we've sort of extracted kind of as much as we can out of the personal income tax system. And we need to look at taxes like VAT. And that's taking into account, as you say, that we've actually got a very, very good tax authority, unlike most developing countries. Even if the incentives for evasion are there, we've got a pretty compliant tax base and a tax authority which is really able to go out and get people. So there's not that much opportunity for evasion. So if people are finding ways to structure their affairs in response to the tax system, then you need to start looking at, is there something about that tax system which you need to calibrate carefully?
Well, we'll be watching very closely. This could be up for more discussion. I suspect that we'll be having this conversation for a while, Hilary. Always a pleasure having you with us. Thank you so much for joining us this afternoon. That was your Business Days, that's a Newsroom Crossing, rather, Business Days Editor at Large, Hilary Joffe.